say where you're at, where you're based. That would be interesting. Also, one of my goals is really for us to have a conversation of ideas. So if you'd like to ask any questions, if you have any comments, if you have any perspectives, ideally, if you have very different perspectives, please put them out there. You can put them out on the Q&A, and we'll make sure to answer every question. So just checking the audio. Can you guys hear me? Can you guys see me okay? Super. We have the first people waving their hands. That is excellent. So again, welcome to our webinar on the shifting energy arena. My name is Chris, and I will be hosting. And this webinar is really a conversation of ideas around things that we have been working on for a number of years, but things that we have been able to put in writing and really maybe understand over the last few months. So I hope that you find our webinar worthwhile. Now, again, you can join the conversation at any time. You can chat, you can ask questions. And for those of you that have seen our previous webinars, we'll stay here until the last person goes home. So whether you're in Canada, you are in Southeast Asia, or even Australia, we'll stay here until we have the last question answered. If you would like to discuss things with only me, you have that functionality. If you would like everyone to see your question, that is a pretty easy thing to do as well. Again, just for clarification, this webinar will also be made available on our social media channels, including YouTube and Vimeo, immediately after our recording. So my name is Chris. I'm primarily a strategy and innovation advisor. So I work with big companies, small companies on growth strategy, transformation strategies, trying to develop new business areas outside what's traditionally known as the core business. A lot of our work over the last couple of years have focused on energy companies that might see they see the energy landscape shifting and changing a little bit, but without fully grasping how and why. I'm also business school faculty, where I have the pleasure and the privilege of teaching both in Norway and various online programs. And notably, I'm also designer and the founder of Strategy Tools, where we develop a lot of tools, online and digital, to helping companies and leaders, strategists navigate these shifts. So the topic today is really coming off of the last ONS, Offshore Northern Seas 2018 conference. The theme was Innovate, and the story, the conversations, the focus, the speakers, the research, the cases, it was really all in line with both our thinking around innovation and this ongoing shift. So we published this, and I'll be spending the next 25-30 minutes to discuss our work on the report, The Shifting Energy Arena. Now, you might have read it. It's available online at engage.innovate.com. You can also just Google The Shifting Energy Arena and you'll find it. It's a PDF, there's a page, and there'll be more content coming. Now, one of the main headlines that we have, one of the main sort of content pieces is really this question: Does it run on sunshine? Does your car today run on sunshine? Now, just taste that question, if you will, for a minute. What does that actually mean? Some might even say it's silly. Some might say it's stupid. Some might even say it's preposterous. What Chris, seriously. But the fact of the matter is, as strange as it might sound to some, this is happening. And it's actually happening with the speed and the penetration that already today, you can go out, you can buy all the pieces that allows you to actually say, yes, more or less full-time, my car, even my cars, they run on sunshine. And we put in this photo of a car with a PV solar panels on the roof. And that's just for show, because that's not really what we mean. You can go out and you can buy a Tesla, a Golf, a Nissan Leaf, or pretty much any electric car today. You can go out and you can buy an intelligent charger. In the report, we discussed Zaptec as one of them. And you can get your home solar panels from companies like Otovo. And just by pulling those three pieces together, you basically have the core infrastructure that allows you to, yes, my car runs on sunshine. Now, there's going to be issues around mileage. There's going to be issues around what if the sun doesn't shine? What if it's really rainy? But the core building blocks for something as preposterous as, of course, my car runs on sunshine, they're already here. They're already here. And that's going to be a big theme for this conversation, is that a lot of the stuff that might seem a bit strange, unfamiliar, the building blocks are already here. And that's a big important message for senior strategists and senior business leaders that need to lead through this shifting energy arena. So why does this matter? Why does this matter? Well, we know, and probably many of you know, that disruptive business models are here to stay. Disruptive business model, not just technologies, because technology is only a small part, but disruptive business models put leaders out of business. We see it again and again and again. Sometimes those leaders are able to sort of come back and do a significant internal transformation, or sometimes they fade away. I like the quote of the previous Blockbuster CEO that said, neither Redbox nor Netflix are even on the radar screen in terms of competition. They're just not relevant to us. Well, he got that wrong. I think the same thing is happening in the energy space. A lot of companies, mostly the big legacy companies, they look out at this landscape and say, you know, this PV thing, this EV thing, it's just not relevant to us. Well, they're in for a big surprise. Because there's a deep underlying change that's happening, that's evolving. And it's the shift that our dear friend and recognized strategy thinker, professor at Columbia, Rita McGrath, calls from industries to arenas. And as a lifelong student and teacher of strategy, this is profoundly important, because we basically raised generations of thinkers and practitioners to study industries. You know, this is your industry. That industry might be the oil and gas industry, where you have the main players and supporters. That industry might be the battery industry. That industry might be software industry. That industry might be EV. What's happening now is that those industries are merging, converging, blurring. There are underlying value shifts in where value is created, captured, and realized. That is shifting. So if your lens, if your perspective is traditional industry analysis based on outdated frameworks, you're not going to grasp this. It's deeply challenging and also very important to understand. So I really recognize and really suggest that all of you read Rita's work. Her last book, The End of Competitive Advantage, is spot on for this. And her upcoming book on strategic inflection points is going to go even more into some of these things. All right, so let's go into our report. Executive summary. If you're going to read one slide, this is it. Here we package it in 3 points. Number one, traditionally, oil and gas, utility, and all these industries used to be very separated. No longer the case. We're seeing a significant blurring between different historical industries. And this is already happening. We have found in our research and our work 13 strategic groups that need to be understood. They need to be mapped out. You need to understand what's important, what they look for, what they care about, and how they influence each other in a sort of system dynamic kind of way. And finally, as a consequence of this, top management, whether it's a big company, a small company, a local or global company, as a consequence of this, top management need to draw up new strategies. You need to have an understanding of accelerated technology shifts. You need to have an understanding of the role China is going to play in this landscape. And you need probably to start thinking about ecosystems, open business model innovation, much more collaboration in your innovation process. And for some, maybe not all, looking into joining what we call a energy-related cluster, or maybe even an energy supercluster. We're going to come back to that at the end. So your industry is no longer it. Understand the 13 groups, and please hurry up and build new strategies based on that insights. That is the executive summary. So what is this? I mean, what a different way of understanding these shifts and these 13 groups, as I will show you, is finding points of convergence. And this was a conversation that I had repeatedly at ONS, speaking with industry leaders and strategists. Where do we see technologies and business models and companies converge? That is a great frame of reference. So if you keep that convergence in your mind, you'll see that when we get into the details. Second, focus on solar. The evolution, the growth, the cost reduction, the market uptake, the market penetration of solar PVs, both on consumers and also in large-scale utility parks. That's one of the absolute key drivers. Watch what the consumers like, because a lot of these things are not driven by the utilities, they're driven by consumer demand and really consumer pull. And then, of course, as always, see where investors are placing their bets. Follow the money. I'll show you. And one thing that we did in kind of our initial research is we looked at this energy landscape and said, what are the pieces we're seeing? What are the building blocks, the puzzle that hasn't been built yet? And we found, as many of you probably know, a lot of very interesting, diverse set of pieces. And so here in random sequence, Google Energy. Why does Google have its own sort of energy program, energy investments, and even doing energy venture investments? Intel, making renewable energy viable. Intel's a software company. Electric charging, the cost reduction curve of PV panels. Tesla Energy, many still think of Tesla as a car company. They are absolutely not. They're an energy technology company. Compatible cars, the risk of stranded assets, the combination of floating offshore wind, fixed offshore wind with other offshore constructions, creating a sort of entire ecosystem offshore around energy hubs. The explosion, if you will, in terms of growth rates for EV charging companies now being increasingly purchased and bought up by the majors. So all of these things, and they didn't really make sense. And also what didn't make sense to us initially was this project. So this is specific. So one of the strategic groups that we look at are the investors. And traditionally, energy investors could be defined as a fairly understandable group. And then this project came along. So this is SoftBank. SoftBank is the world's largest venture capital fund. They have close to $100 billion under management, currently sitting at around 93 to 95 billion and rising. They mostly invest in technology companies. They invest in Uber, they invest in Grab, they invest in what they call game-changing technology companies with global potential. And then all of a sudden they go invest in energy. They go invest in the world's largest and most ambitious to date solar energy project in Saudi Arabia. They plan on potentially investing over time $200 billion to build the world's biggest solar energy park. Now, why does this matter? It matters because SoftBank, as an investor, have shown again and again and again that when they invest, they take a, we call it, industry shaping role. They go in and they shape the rest of the industry because of the size and the financial resources that they have, but also the strategic thinking they have. So we have hundreds of examples like this. There are many energy puzzle pieces. There are significant shift in the investor profiles as they come in, and all this kind of fed into our research early on. So what does this shifting energy arena look like? Traditionally, you have a really strong group. Maybe the biggest industry in the world right now. It's definitely the biggest industry in terms of free cash flow after operation and investments. And it's a fairly homogeneous group, a similar company, many of them coming out of the sort of state-owned apparatus. They're pretty similar in terms of strategy, comparatively. Equally, you have utilities. Utilities are, again, more or less following a similar business model, more or less following a similar financial model, initial ownership model, although that's changing. And you have those two groups that are the traditional energy-related companies. Now, they share a really strong trait that we call they're large. They're typically, not always, but typically slow. They're very asset heavy, they're very balance sheet heavy, and they're very CapEx heavy. Long investments, long return cycles. Although most investors aren't that long, they typically aim for longer investments and longer investment horizons. And they can have projects with payback periods of 40, 50, 60, even 70 plus years. Big and slow. But what we found was that the shifting energy arena actually looks like this. The landscape has shifted significantly, meaning there are now a number of other, not only companies, but groups of companies coming up that really matters. Now, in some cases, we see how they matter today. But in other examples, we don't really grasp how they matter, but we know that they will exert influence in ways we can't fully grasp yet. That's where it gets interesting. I'll give you a couple of examples. What will infrastructure mean for energy? Will real estate companies and real estate developers, large scale, start rolling out integrated PV, solar, battery storage, and an electric vehicle as a part of their master plan architecture? Will companies like Masdar, coming out of the Middle East, now investing in offshore floating wind in the North Sea basin, will they turn around and become significant large energy companies? Mobility companies. Now, every single car manufacturer today is shifting towards mobility. It's built on becoming a software-driven company, a electric-driven company. And once you sort of take on those two approaches, you hit the battery question. And the battery question is really not only a matter of storing energy for the car, but how do you feed that back into the grid, and how do you become a part of the energy grid, the smart grid of tomorrow? And again, that's already here. Now, technology companies, Google, Microsoft, Apple, Cisco, Intel, even Amazon or Tesla are already big players within the energy space. And we know that every industry that sort of get exposed to the value drivers of software mechanics end up being software-driven industries, where most of the value creation shifts from physical assets to information-based assets. What does that mean for energy? We don't really know yet, but we know that software will matter much, much more. This landscape is shifting. I'm going to take you through slightly more detail each of these groups to figure out what does that mean. I think the big question right now is, what kind of questions should strategists, top management, board of directors, corporate advisors, innovation managers be asking themselves? Well, we need strategic curiosity outside of your traditional bubble. We probably need to learn, like Peter Sims wrote, to take small bets and build small portfolios of projects without investing too much upfront. Energy companies, translated, should effectively take a software MVP hack approach to their investment process. Agile partnerships team up with likely and unlikely partners in a very different way. Shift from internal company-focused innovation to much more ecosystem innovation. And then start digging into this concept of hyper collaboration, competing on a very aggressive, very fast timetable to make innovation happen across a broader ecosystem. So these are questions. These are not answers. They're not recommendations. These are questions that probably should be asked at the most senior levels. So let's delve into the 13 strategic groups. Number one, oil and gas companies. These are the traditional oil and gas majors. They can be onshore, they can be offshore, they can have fracking, they can have gas. But they're well understood, well funded, and they're so big that when they decide to go into new areas, they have the talent pool, they have the capital resources, they have the political connections to really shift things significantly. Second, utilities. Utilities are, of course, much closer to end customers. They're traditionally local by design. Now, local can mean in your city, in your region, in your country. You have one of our clients in Malaysia, TNB, or Tenaga Nasional Berhad, that effectively have the Malaysian energy grid, but they're using that to grow to be what they call a champion inside and outside of Malaysia. Now, utilities are increasingly sort of coming into some of the core areas of an oil and gas company. As they're exploring wind, they bump into each other. As they're exploring storage, they bump into each other. As they're exploring EV, they bump into each other. Infrastructure. Real estate projects will have a big impact on energy infrastructure, energy solutions. We could get to a point very shortly, much, much sooner than most people think, where every new home will have a battery, every new home will have integrated PV, every new home might end up being an energy producer, not an energy consumer. So you're actually building tiny energy plants, pushing energy back into the grid, where the utilities will be on the wrong side of that equation based on their historical cost structure. Now, that is already happening. You can find numerous examples today where people produce so much excess energy, feeding it back to the grid. And although that's happening on a very small scale in terms of total users, we can see that grow very aggressively over the next 10 to 15 years. Mobility. Now, traditionally, a car company was a car company, and that was about it. Again, we're seeing convergence here, where battery, software, technology integration is really playing a big part. Now, there's a lot of things being said about the electric car will kill off the oil and gas industry, and then to a point that might be true, but it's not going to happen as aggressively as some might have imagined, but it is a big trend. Big technology, Microsoft, Amazon, Apple, Facebook, all of these companies will enter into the energy mix in different ways, and they will be able to capture value that we didn't really know existed. Battery. 86% of all lithium-ion batteries are now being produced in China. China will be able to shape the battery industry, but more interesting, as a consequence, what they are doing is they have the battery and then they build a product around that. Yesterday, 2 days ago, we had an analyst say, oh, we accidentally discovered 200,000 battery buses rolling around China. We didn't even know they existed. BYD, notice the name, BYD. It's the world's biggest, or one of the world's biggest battery producers, but they're not a battery producer. They are a producer of products around the battery. Electric cars, electric buses. We'll probably see a number of different industrial and consumer-oriented products around battery. Battery matters. We'll see much more of that coming up. Then we have what I call the traditional pure-play clean energy companies. That's Ørsted in Denmark, Scatec Solar in solar, First Solar in the US. These are now getting more, they're getting better at their business model design. They're getting better at their financials. They're able to attract more capital, and they're able to grow. We might see an M&A landscape play out here, but they matter. They're not as, of course, big or influential as the oil and gas and utilities, but they're growing. And we have the ecosystem. Now, ecosystem are the incubators, accelerators. It's the powerhouse in Oakland. It's the Techstar Energy happening globally, but physically taking place in Oslo, Norway. You go back 10 to 15 years, the ecosystem, the incubators and the accelerators were pretty much non-existent. There was a lot of research, but this speedy deployment and growth of early stage companies and ideas didn't exist. Now, the ecosystem development will probably mean that there will be much more acquisition of early stage companies. There will be a faster innovation cycle, meaning larger companies will be able to take up ideas quicker. There will probably be a number of liquidity events, meaning founders will get cash out. And look, comparing to other industries, those founders are now very likely to reinvest in new energy-related companies. So that can be a very positive reinforcing cycle playing out over the next 10 years. Startups and scale-ups. When you start looking, there are hundreds, thousands of energy-related startups. And once you tap those into this underlying shift, you realize how much investor capital they have access to. These tiny companies can now have outsized influence in helping accelerate this shift. Investors. Some analysis of this underlying shift doesn't include investors. That would be a mistake. Looking at where the biggest pension funds, the biggest insurance companies, the biggest investors in the world, up to institutional investors like BlackRock, where they're putting their money, what they're focusing on, what kind of questions they're asking, what kind of demands they put on the top management at traditional carbon-based energy companies. The investors matter, and they will continue to matter, both for early stage company, for growth stage, and for late stage and more mature companies. So pay attention to the investors in this shift. Customers. Customer preference will drive faster innovation. That be on consumer energy solutions, it'll be on consumer PV, but customers and consumer preference will help accelerate this faster than utilities and big oil traditionally would do themselves. Regulators. So a part of our research kind of put us in contact with numerous people, and we have one guy say, it isn't fully understood, but regulators are now the disruptors. Disruptive regulation will accelerate the shift we're looking at. All of that varies market to market, and notably the US have had some setbacks under the current administration. Regulators will play a big part in understanding and driving this shift. And finally, government. Visionary government leadership matters. The Paris Accord puts demands and expectations on government. Many governments will fall short. Some governments will meet it, and some governments will hopefully rise and show true, genuine leadership. And we're seeing those pockets of government both on a city level, on a state level, and also on a national level. Those are the 13 groups. Now, what we're discussing here is not really all that new, although for some it might be a lot to take in one go. This concept of the battleground, this concept of the shift, have been increasingly surfacing at the intersection of technology, energy, mobility. And there's a lot of stuff that you can read if you want to go into that, and you'll find sources in our report. Now, a few things that came up in our work was we have to understand the financing, so understanding the investors. There is today 3 key conversations happening. And there's no quick answers here. Number 1, there is a central energy paradigm, which is the traditional infrastructure where energy companies will invest upstream and they'll distribute energy downstream. That's how most energy grids and utility companies are built. Then you have a distributed energy paradigm, which is a much less capital intensive. It has much more OpEx and CapEx. And the energy sources are being distributed out to where the consumption is happening. So that means no more nuclear power plants, but a lot more tiny windmills or tiny solar installations. Now, if you do that on a few houses, it doesn't really matter. But if you're able to build a distributed energy paradigm on a city block or even a city, it really matters. Financing those, very different investment proposals, very different timelines, and very different return scenarios. But then there's the significant risk that is being debated around stranded assets and stranded infrastructure. And I believe it's important to understand those. Now, most energy companies traditionally will invest in a 40 to 60 year mindset. They are investing in coal plants, they're investing in nuclear plants, they're investing in oil and gas exploration, production. They're investing in gas pipelines. They're investing in oil fields that might sit on their books for 5 or 8 years before they're tapped into. They're building more energy grid. Now, all of this has a significant capital cost and it sits in the balance sheet. But what's happening and what the Central Bank of England has warned and many economists have warned is these assets run the risk of becoming effectively worthless. They run the risk. They're not today, but they run the risk. They run the risk of becoming what is called stranded assets, meaning you can own it, but it's not worth developing. Or stranded infrastructure, meaning you've already built it. India, China, Malaysia, there are hundreds of coal plants in operation today that are more expensive to run than the operating costs of a solar facility. We will see a painful shift on the financial side because of the legacy cost and the legacy investment behind stranded assets and stranded infrastructure. Now, anyone sort of tapping into, really going deep diving into understanding this shifting energy arena, we believe that the financing plays a big part and it's really important to grasp. Now let me shift a little bit and sort of take some lighter aspects, more amusing perhaps. So this is an old question, and it's outdated. The company is now called Equinor, but we're going to phrase it back in time. So a couple of years ago, a conversation came up. Should Statoil, that was the name at the time, today it's Equinor, should Statoil invest in Tesla? And this was a question that came up in some strategy discussions. And it was one of those questions that we would typically ask to open conversations rather than give specific recommendations. It was a question to explore, not to decide. Now, initially at the time, that was preposterous and silly. Statoil, Equinor, was an oil and gas company and very focused, very capable, probably the best well-run oil and gas company. And Tesla, as everyone knew at the time, was a car manufacturer, car company. There was no strategic fit. There was no reason. There was no purpose behind a investment. Fascinating enough, Chinese software company Tencent acquired 5%. Saudi Arabian government fund acquired a couple of percent, now potentially up to 8%. Because they saw what maybe others didn't see, that as you're moving from an industry focus to an arena focus, what used to be not relevant might become very relevant. Today, these two companies, Equinor and Tesla, they're coming closer and closer together. Yes, they have very different value drivers. They have very different value creation mechanisms. But at their core, they both say, we are an energy and technology company. Should they invest? It's a different question. Tesla, as many of you know, have just exploded in terms of share price. Equinor has had a very good development, but it has a much more sound base. So that question is no longer so interesting. That question is no longer that relevant. What I believe is relevant is when you understand this shift, and you're starting to have these conversations, what unlikely questions should you be asking? Should we invest in battery? Yeah, maybe. Should we invest in battery research? Maybe. Should we invest in a portfolio of Chinese battery startups? It's a very different question. But managing in this shift requires us to have different conversations and ask different questions. Because we're seeing some really, really strong trends. And this is the second part of the report, where we get into more of the specifics and the recommendation, not just the understanding. But there are 3 absolute key drivers that are now happening, regardless where you are in that arena. The rise of digital companies. Every company in the energy space is becoming a software company. Now, it means very different things to very different companies, but if you don't have a data strategy, if you don't have a data capture, data development strategy, you're not seeing where the value creation is moving to. Every company will become a digital company. You might have physical assets, but a lot of the value creation happens out of the digital. Number 2, there's a lot of clashes right now around EV and EV charging. Shell goes in and buys New Motion in the Netherlands. BP is investing in electric car charging. Equinor is investing in electric car charging. And I believe that utilities, battery companies, mobility companies, traditional oil and gas companies, they will all kind of converge and clash head on around electric mobility and electric mobility infrastructure. It is already happening. It'll be much, much stronger in the next 2 to 3 years. And third and final, this was a big thing at ONS. China. China has the market size and also now the demand side to shape future energy markets almost at their will. If the Chinese government say we're going to shift even just a few percentage of our energy mix away from coal and over to LNG, it will completely blow up the established price range of LNG. China matters. You need a China strategy. Even if it's just a listening post or exploration and outpost, understand the energy shift for China because it really matters. So where's the battleground? Well, we see on the sort of kind of conflicting battlefield, if you will, solar energy. How should traditional energy companies respond? Should they have a purchase M&A strategy? Should they build it in-house? Should they try to deny it? But you need, at this stage, to have at least a curiosity, conversation, insight, understanding around how should we respond on solar. Number two, like we talked about, EVs and EV infrastructure. What does that mean to us? How do we respond to the EV wave? And it's totally legit to say, well, there's only 4 million EV cars in the world. It's less than 1%, and that's true. But the exponential trend is so strong that the world is going electric. And then digital services. Most energy companies are now fundamentally at risk of becoming disrupted by either big software companies or smaller, nimble software companies. How should they respond? So you need a solar strategy, you need an EV strategy, and you need a digital strategy. That's the industry battleground that we see right now. So what are likely events in the next maybe 6 to 12, maybe up to 24 months? So these trends are already here, but I think they're going to be much more profound. They're going to be much more visible. We're going to see them again and again and again. Number one, there will be increased mergers and acquisitions. There will be oil majors acquiring smaller oil majors. There will be utilities acquiring other utilities. There will be battery companies just exploding in terms of getting their size. There will be a lot of acquisitions and mergers across the arena. Second, everyone, and I mean everyone, is investing in solar. Governments, big oil, big utilities, tech investors, infrastructure developers, startups. Fascinating enough, the biggest investor in solar right now in terms of number of deals, that's French-based energy company ENGIE. The biggest investor in terms of absolute deal size, so capital in, that's Japanese SoftBank with the money coming out of the Middle East. We will see an absolute trend where everyone invests in solar. Different business models, different investment theses, but everyone will be doing it. And then finally, and we touched on this already, all of the energy companies that we will be seeing will come out of the digital side. Apple, Tencent, Alibaba, Microsoft, Amazon, they will be developing energy solutions, energy cloud, energy backend systems, energy consumer-oriented systems, because they're much faster, much nimbler, and they're much more consumer-centric than traditional energy-related companies. So expect M&As, more sun, more digital competition. So what are the implications? What does this mean? You have the shifting arena, you have this short-term battlefield and battleground. What does that mean? Well, at ONS, I had the privilege of speaking with a number of strategists, a handful of CEOs, a lot of board members. And just like we covered in the report, there's kind of 6, maybe 3 significant, but there are 6 implications that energy-related companies need to look at. Number 1, accelerate digital transformation. Now, this is happening. Everyone's getting into the space, but let's be very clear. The digital transformation needs to be accelerated. Number 2, board of directors. That came up as a bottleneck again and again and again. The board of directors need to be upgraded with software skills and technology skills. Putting the board of directors on a strategy safari in Silicon Valley to listen to Google, that's nice, but it's pretty much worthless. You need deep skills, deep experience in software and technology at the board level. That might be painful. You might need very different people, but it needs to happen. It needs to happen for companies like Equinor. It needs to happen for companies like NG, BP, but also down to local utilities and battery companies, software companies. Number 3, big companies need to invest more actively, more aggressively in smaller tech companies and startups. There's so much to be gained from that inside-outside innovation strategy, and we're going to come back to that in a minute. Number 4, companies need to understand this story. They need to understand the shifting energy arena. They need to understand that how they traditionally looked at their industry is pretty much obsolete, and build a new 3, 5, 10-year innovation strategy out of that. We've seen this trend, but increasingly energy companies should genuinely look into partnering with accelerators, outside VCs. They should connect to, let me say, Station F in Paris or Powerhouse in Oakland, but also meet and speak with investors in that space to understand what they're looking at. Energy companies, they maybe shouldn't set up a Silicon Valley outpost, but they should definitely be learning from investors and accelerators from around the world. And then finally, China. You need to have a China strategy, as simple as that. You might say it's not relevant today, but trust me, when you dig into it, you'll see that it is. To summarize, accelerate digital transformation, upgrade the board with technology skills, invest in more startups, design a much more broad innovation strategy, listen to, partner with accelerators from VC, and get a China strategy. Now, these are for many energy companies quite different, but very important. So how prepared are you? This is a test. It's built on our work around strategy tools. It's a 1 to 5 score. You can take it. You'll see that the maximum score that you can have is 25 points. And we've segmented your score into 4 categories. Now, I had many conversations at UNES around this. I'm not going to share any results or any data with you. But what I suggest is, if you're listening to this and if this is relevant, grab the transformation test, put it on the table with your team, your management, senior management, business development, HR, up to the board of directors. Get people talking about how prepared are we for this transformation, because it's going to hit you in a big way. And based on what we've seen, we suspect that these questions are tough, challenging. Now, this tool, it can be organized as an online survey. If you're interested, you can get in touch. We can also use this data to correlate with other financial data, other HR data. So there's a lot of interesting things that we can do if you're interested in scaling the transformation test within your company. What we also suggested during UNES was you need to have a much more broad-based innovation strategy. Now, some of you, if you joined one of our previous webinars, you've heard about this previous. We call it building a minimum innovation strategy. It's built on the build, buy, partner, co-invest, co-develop framework. And I had many interesting conversations around this. And I think if there's one big takeaway from this conversation, it really is, try this. Try this. I had a number of people, strategists mainly, kind of play around with the minimum innovation strategy, and numerous came back and said, this has really helped us think slightly differently. This matters. Building a minimum innovation strategy that's fit for the shifting energy arena, that matters. Now, I'm going to spend the next few minutes on a topic that really came out of the ONS event. And it's a concept of ecosystems and landscape. So this is not something we covered in the report, but again and again, it came up. So we have done, and some of you might be familiar with this, quite a work around superclusters that drive future ecosystems. And what we're seeing, what we're witnessing in the shifting energy arena is that you're no longer working on a very narrow industry. You need to understand this from an ecosystem point of view. And that's where superclusters come in. But superclusters can be understood as a continuum where you first have emerging clusters. That's a local group, pretty regional by design. It has a strong footprint in the city or that part of the country. But it's also incomplete. It doesn't have all the building blocks that is required. You can grow that into a growth cluster. Growth clusters are industries, areas with strong potential, but missing some key elements. And they typically span region or even national borders. Where we focus a lot of our work right now, and that was the big theme also at the ONS, was scaling that to internationally, globally powerful magnets that we call innovation superclusters. Large value creation, large export, a significant what we call attractant to pull people, researchers, investors, startups, scale-ups, international partners in. And I think that we will be seeing a number of superclusters around energy. The energy shift is so big, it's so profound that you need to move from a company perspective to an ecosystem perspective to really be able to tackle it and deal with it. Now we've mapped out, and on our site you can find more information, but we've really mapped out what are the building blocks for innovation superclusters. We need a high density of actors. Well, you have that in the shift. You need a positive reinforcing trend of evolution and progress. Well, you have that. You need to have fairly close physical proximity. That happens to a certain degree. You need a strong network and collaboration culture, and you need to share information, knowledge, and insight. So many of the traits that we've mapped out within the Innovation Supercluster Framework can now be found in the conversations rising from the shift. Some of you might be interested in one of our tools that we call the Energy Arena Supercluster Framework. You can find this online, but it's a tool that we've developed in collaboration with international research and international practitioners that allows you to have good conversations, strategic conversations around, okay, how do we pull in the stakeholders? How do we pull in the entrepreneurs and the accelerators? How do we pull in the investors around the shift? How do we pull in the corporate from oil and gas, from energy, from utility, from battery, from mobility? How do we get them in the same room and get them talking together? How do we pull in the right government resources? And how do we pull in the academics and the sort of the long-term research? And you'll find that working with our Supercluster series tools, you can really have some great strategic conversation that allows you to move the innovation focus away from a company to a broad ecosystem. Because where we're heading, it's really from a closed business model innovation to an open business model innovation. There will be more collaboration, there will be more sharing, there will be more cross-functionality to help accelerate this shift. And I'm going to close off this webinar with a few reflections on ONS. Because this year's ONS was profoundly different in many ways from the previous I've been allowed to attend. So I'm going to share 3 pictures that kind of summarize it pretty well. Number 1, energy disrupted. One of the absolutely most fascinating keynote speakers, and there were many great keynote speakers, was Ramesh Nam. He's faculty with Singularity University, where he's also the co-chair of the energy programs. Ramesh talked a lot about the technology trends and the technology disruption trends that are now hitting the energy landscape. And it was almost like we were sharing minds as he was going through his slides in terms of our work with the report. I had some wonderful conversations, and we will actually be featuring a interview with me and Rames in one of our upcoming newsletters. And we suspect that we will be seeing more of Rames in our energy work moving forward. Really great guy, and he has a few good books. So I recommend you check out Rames Naam on either YouTube or Amazon. Now, a second highlight from Unas, and this is really important, it's expect a very cyclical industry. And what you're seeing here is the output and demand and the oil price going back since 2000. Now, many of you recall the boom and bust cyclical industry, but what Rystad Energy showed in their analysis is that in the coming years, you can expect a price range of oil between 100 something, maybe even 120, 130, coming down to 30. So they expect the consequences of this shift to really come out in terms of the oil price and the long-term global demand rising and then eventually slowing. And this resonates in most of the big companies. There's a lot of talk about change. There was a lot of talk about resilience. Here we have Andrew Brown from Shell, who talked about how Shell is approaching this shift. Yes, they're investing in oil, but yes, they're also investing in a number of other areas that they believe will be important in navigating the shift that we're witnessing. So where does this lead us? This is going to be my closing slide. I'll be happy to take a few questions. So our work with the report, our work with companies around the world on this, and also a lot of the conversations from UNAS really resonates in these 3 points. Number one, the shifting energy arena is far more than just let's tweak our business model. It's a profound shift from industry focus to arena focus. And for the right companies with the right resources, it's a fantastic opportunity. Number two, companies need to develop disruptive mindset. If the mindset is resource extraction, value extraction, they're not going to get it. Any company, whether that's a big or small company, will be able to find significantly interesting business models and opportunities, but it starts with a disruptive mindset. Hint, read more of Rames's work and you'll see what it means. And finally, number three, maybe the most important, if you want to be successful in this shift, a lot of capability building will be required. Learning, teaching, understanding, both in terms of innovation strategies, partnerships, new technologies, new consumer demand, investor relations, investor messaging. There will be a lot of capability development that needs to happen to be able to thrive and even surf in this shift. Will large energy companies like Petrobras, Petronas, Saudi Aramco, BP, will they be able to? That's going to be one of the major questions as the shift evolves. We believe they have every chance to be successful. We believe that hundreds of the startups that are now emerging, they have a chance to be successful. But there will be very interesting competitive dynamics that unfold here in the next 5 to 10 years. And that, ladies and gentlemen, is where we're going to pause this webinar. I'll be very happy to take any questions. You can download the slides. You can watch this on YouTube. You can find the report on our webpage. I really hope it's been interesting. I'll be very happy to continue this conversation in any kind of channel that you prefer. We fundamentally believe in this shift. We're seeing it, we're witnessing it, we're trying to understand it even better. And I hope it's been helpful for you as well. So I will be very happy to take any questions, any comments. And we are at 1 o'clock our time and Central European time. So on that note, I want to thank you very, very much for joining us. I hope it's been insightful. I really hope it's been worth your while. Let's continue the conversation in any channel that you prefer. And I wish you all really good luck in navigating the shifting energy arena in your context. Thank you for joining and have a wonderful weekend. Thank you.